Hey everyone, it's Larry Berman here, Canada Day long weekend. Happy birthday, Canada. It's a pretty exciting first half of the year. A lot of charts to look at today. Um, we'll have a step back on the week and look at what new we learned on the economic front, and then let's dive into some of the first half charts, see what they're telling us. So on the economic front this week, initial jobless claims ticked down from previous weeks. 4-week moving average is moving up. The continuing claims jump in the number was the largest since 2021. So we are starting to see a little bit of weakness on the labor side. Nothing severe by any stretch of the imagination, but it's starting to creep in. When we look at durable goods, again, the production side of the economy, the output side, orders, non-defense, ex-aircraft, and shipments. Those are the components of the durable goods that feed right into GDP, and the weakness there is evident in May. So last months of the quarter here starting to turn down. In terms of pending home sales, we are now at the worst levels in decades. So again, the underlying, what's under the hood, is really slowing down. We got into Friday's data. The PCE numbers came pretty much right on the screw with a slight upward revision to core from previous month. So slight negative tilt. When you looked at the mix and you read street economists were talking about the composition of the inflation numbers, there were some breadth overall. So initially, markets like that. We got a pop first part of the day. We also had the debate last night between Presidents Biden and Trump. And I fear for the United States in many ways. One, their fiscal outlook is tragic. Social Security Trust Fund is insolvent. The monetary side of things are just absolutely awful. And I don't see a fix for that politically, certainly not with these cast of characters leading things. Biden's clearly not fit to serve office, but really Trump isn't either, from the perspective of his consistent and persistent lying to the American people and manipulation of the narrative, and wow, it's mind-blowing. When we saw the Michigan inflation numbers at 10, that was the pop to the market, where the inflation expectations on sentiment came down quite a bit. So that really goosed the markets up to a point. And then I think people started to, maybe it was the quarter end, there was some rebalancing, some profit taking. Hard to say exactly what the catalyst is always. But bonds started to really sell off. And the thought that if Trump is the president and the deficits with tax cuts and everything else are going to be worse than under Biden, let's time will tell, I guess. But that's a real problem, and I don't think it matters who wins. That the fiscal outlook is toxic, and again, there's no fix for that. So I think you've got higher for longer rates. And while we saw massive inflows into things, ETFs like TLT and the long end of the curve, it's being, at this point, equally met with offsetting selling when it happens. So that is going to be a headwind for markets, and maybe that's what caused equities to start to cool off Friday. When we get into looking at the charts, and we look at the daily, let's blow it up here a little bit. We can see the higher high, all-time high, S&P close near the lows of the day, reversal pattern on the week. If we bring up the weekly, we notice the divergence that continues to develop, but in the last few weeks, higher highs, higher lows. So that divergence we started talking about that was notable a few weeks ago, right? Higher highs, lower highs in terms of RSI, it's still playing out. Like, we don't know until this pattern completes, meaning the high fails, we come back into the range, and then you can point to the divergence, say CCC, but right now it's in development. It could take weeks more, it could take months more, hard to say. But typically, these weekly divergences are measured in 1 month to 3 month kind of windows. So we're into that window now, into the mature side of that window. The last time we saw a divergence in RSI from an overbought like we are was in the late stages of the 2021 rally. Markets were grinding higher. You get the reversal pattern there, but it isn't until the market kind of breaks trend that you kind of say, aha. Now, that in this case would probably mean a break below 5,000, the lows we saw a few months ago, back towards the trend of the average, the rising 200-day, like this is 200-week trend, sorry. But that's what this is. I don't think we're going to see that in the next 6 months. But never say never. Caution from that message is still kind of the overwhelming kind of thing. So let's look at subcomponents to the broader markets and then broader components, the Qs. So again, here's the dailies on the Qs. We failed to make a higher high. We actually tested the high. Maybe that was the catalyst for the selling. Failed breakout, try to make a new high led by tech. There's no new buyers. Okay, time to take some profits into the quarter end. Maybe, right? Maybe. When we dig a notch deeper, not just tech, but semiconductors, where the leadership was. Clearly, the peak was back here a week and a bit ago versus, the last few days. So that's interesting. Equal weight tech. No higher high there. Higher high relative to the last few months, yes. But this week, no. And again, so the average tech stock this week didn't do as well as the Qs on Friday and finished, well off the highs. Equal weight S&P 500, year-to-date basis, last few months, average stock is struggling on the large cap side, even though year-to-date we're up, again, led by big cap tech. But at equal weight, we're only up a couple percent on the year. So, that's the big message here. Not sure what happened to my last chart, but my last chart was supposed to be Russell 2000. Let me just bring that in here. Same time frame. Year to date, draw the line across. 2,000 stocks of the 3,000 in the US, Russell 3000, broad US index, VTI, total US stock market ETF. The bottom half, it's just not there. So the average large cap stock not performing well. The small cap stocks not performing well. I just wonder, the technicians out there talking about market breadth and the overall trend improving, I'm just wondering what they're looking for. Reach out, let me know, please, because I don't get it. So just to wrap, again, happy Canada Day, everybody. Hope it's a great start to the summer, and we enjoy family and friends on the long weekend. And if you're like me, you'll be spending a lot of it on the golf course. Have a great one, everybody.